You're listening to QSBS Solved, where we share insights for founders and investors looking to maximize their business's growth, exit opportunities, and tax savings. Our team at QSBSrollover.com offers specialized services to help you benefit from owning qualified small business stock. Our podcast guests are leaders in their respective fields and work on every side of the startup journey to help founders and investors win. The ideas and opinions shared here are not investment, tax, or legal advice. Reach out and we'd be happy to connect you with a qualified advisor or tax counsel. For now, enjoy today's episode. All right, I'm here with another episode of QSBS Solved. Happy to be joined by founder of Acquire.com, Andrew Gazdecki. How you doing, Andrew?
What's up, Brady? Doing good. Thanks for having me.
Yeah, I think as someone who spends a lot of time on LinkedIn, you're prolific there, and the companies that are being sold on Acquire are prolific. It's really cool. I like when you post, or your team posts, and I can look through the different little deals that either $2,000, something being sold for $2,000 or something being sold for a couple $1 million. It's really cool to see the span of businesses that you guys showcase on the platform.
Yeah, so I always say, acquisitions, every one of them matters, and someone's got to celebrate, even the little ones.
Yeah. And you had a couple of your own too in the past. Did you sell 3 different companies, or walk maybe through just your experience going through exits in the past?
Yeah. If we count 3, one of them's going to be in college. It was like a job board to find mobile developers.
Nice.
I used to do this thing where I'd start a new company every summer in college. And the idea was one of them would take off and one would get a job, that sort of thing. But when the iPhone first came out, I knew mobile apps were going to be pretty big. And I built a job board for businesses to post. I want a mobile app for my restaurant or hotel. I want to do a loyalty program, stuff like that. And it started taking off when I started businesses paying like $50,000 to make these mobile apps.
Wow.
So I sold the job board because I had this idea where, what if there was a template where you can pick certain features that you want, you can pick what kind of business you are. So I sold the job board to eventually start a company called Business Apps. And I sold the job board for like $50K in college, which is like $10 trillion in real life money. And started Business Apps my senior year in college. Ended up running that company for 8 years, and it was acquired later by a private equity firm. We reached about $10 million in annual recurring revenue. Bootstrapped the business. I had 2 really, really small investors. So that was like my big exit. That was the one that I like to say, really changed my life. And then after that, I started a crypto trading company for some reason. It was a decentralized Coinbase, basically.
Yep.
It was also a good business, but not nearly as big of a win as Business Apps. Ended up developing like a trading platform on the Ethereum blockchain, and then we sold it to a bigger company because it was just a big headache to have a cryptocurrency exchange. We didn't want to live doing that for our whole careers. So that's 3.
Yeah, I mean, you kind of skipped over the line that you said that you did this thing where you just started a business or a company every summer. Was that an intentional thing? Did you just sort of find yourself doing that? Or was it like, this is what I'm going to do, is start things? Because that's not the mindset of most 17 to 20-year-olds.
Yeah, so I read this book in college. It was called How to Get Rich by Felix Dennis. It was recommended to me by a successful entrepreneur at Chico State. His name was Christian Friedland. And so I just thought, starting businesses are hard. The more experience I can get, the better. So yeah, every summer I started like a World of Warcraft gold trading platform before that. My friends still make fun of me for that one to this day. I started like a real estate marketing company. Those obviously failed. But the idea was, more shots on goal. One would eventually picked up, and it kind of worked out. But yeah, that was my thing in college. I was dead set on not getting a job.
Yeah, that's. I think that more students would be better served by going into school thinking, how do I get out of this 4 years and not have to go work for like McKinsey or Morgan Stanley, and I could actually do my own thing, versus like that be the goal and then fallback is maybe I'll do my own thing.
That's literally what I did. I went
Yeah.
into college and I was like, all right, I have 4 years.
Hmm.
Everything's paid for, taking out financial aid. I don't have to worry about getting a job. I have 4 years to figure this out. Because after I graduate, once I get a job, I won't have time to work on different business ideas. So it's basically all I did.
Yeah, and in our business we only do QSBS, which basically means we pretty much exclusively work with venture-backed founders. And so the deals that make headlines in the venture space are like, whatever sells for 10 billion or 40 billion, or Google acquires for 70 billion, whatever the number is.
Mhm.
And then we go on acquire, and you have companies selling for $5,000-$10,000. In some cases, obviously, you have a huge range. But it makes me think of the job board that you sold for 50,000. Do you kind of develop you just like a deep care or respect for the founder journey of even those, call it like smaller exits that don't make the headlines? Is that part of Acquire's ethos?
Yeah, well, I think if you look at the numbers, most exits are pretty small. I think the
Mm-hmm.
number is 98% or 99% of exits are under $30 million.
Mm-hmm.
It's hard to get that number because, excuse me, not all exits are reported, so they could be super small and you never know about them.
Sure.
So you're kind of just left with the reported numbers of really large exits.
Mm-hmm.
But the reality is, most exits are small businesses, where they're in the millions or the hundreds of thousands. The average acquisition on Acquire is about 250,000. It goes up between months if we have a large transaction or if we have only small transactions.
Yeah.
But I think it's amazing. Like, I think a lot of people really overestimate how much money they need to be financially secure and
Mm-hmm.
feel like it's a big win. I know a lot of entrepreneurs feel that the only path is to, build a multi-billion-dollar company, sell it to Google, like you were just talking about, which is
Yep.
amazing. I wish I could do that. That would be great. But the reality is, I think a lot of entrepreneurs, they would be equally as happy building a profitable business, selling it for, several $1 million, and probably be way less stressed out doing it, and just increasing the odds of their success as well.
Yeah, I mean, selling a business at all is extremely challenging, but undoubtedly selling a business for $4 million is easier than $40 million, right? And so that sort of makes me think of the bootstrap founder, because the playbook that even entrepreneurial minded college students get fed is find, find something very few people are doing, bring on 3 co-founders, go through YC, scale, versus you could have the same, or in a lot of cases maybe better outcome, building that thing that you've been tinkering with for 5 years and actually taking it public to build it in public and commercialize it. Seems like there's a much straighter path to getting to that number, whatever it is for people.
100%. I think a lot of entrepreneurs just don't understand the odds of success as well. Like, 90% of venture firms don't return 1x to their investors,
Yeah.
meaning that's a venture firm with a portfolio of potentially hundreds or, several hundreds of these
Yep.
startup bets. So I think if you think of it in that perspective, and that's what I tried to do in college, was maximizing my odds, where each startup has a 10% chance of working. So let me get, 4 of those bets rather than just one of those bets. And then when I built the second company, the idea was, let's not raise capital. Let's build a business where I can, potentially sell this for millions of dollars rather than
Mm-hmm.
billions of dollars.
Mm-hmm.
Because I felt that path had a higher probability of success. And you can always switch your path too. Like, you don't have to, commit to one path in the beginning, but it's much harder to undo when you say raise capital and burn a lot of money, and then you
Right.
want to switch towards, more of a lifestyle, profitable type business.
Yeah.
But again, I think, entrepreneurs should be more cognizant of just which path makes the most sense, just based on, what they're really after. What I mean by that is, I think a lot of entrepreneurs don't necessarily ask themselves what they want to achieve out of the startup.
Mm.
For a lot of founders, I think they just want to secure a better life for their family. They want to get rich. They want to pay for their house cash, whatever that means to them. Or maybe they're mission driven and they just have this problem. They have to solve it and they have to
Mm-hmm.
build the multi-billion-dollar thing. But I think a lot of founders just never ask that question. And if they did, like, another example could be just, I don't want to work at a job and I want to be in control of my time. And if you are just honest about that one question, what you really do to build your business, I think would be a lot different instead of just like the one path that everybody hears about.
Did you feel like you were asking that question back in college? Like when you're just, did you have that in mind? Hey, this is what I want out of this lifestyle as a founder. Were you thinking that, or did that come later?
Yeah, 100%. I mean, I just wanted financial security. I didn't
Sure.
grow up with too much, and I wanted to build wealth for my family. And that's really, why I bootstrapped the business. I didn't raise capital. Um, so absolutely, and I'm glad I did too, because I think a lot of startups too, business apps grew to around, 10 million in recurring revenue.
Mm-hmm.
For a venture backed business, that's not a huge win. That's not, we didn't ring the bell on Wall Street. We didn't hit like a multi-$100 million valuation. But since we had a very light cap table with, essentially me and my team and two small investors, the outcome was life changing. Like you
Sure.
mentioned at the beginning of the podcast, the outcome compared to if we had gone through YC and raised venture capital and had like three co-founders, it's entirely different.
Yeah.
Um, so I think again, that's just something that a lot of founders, if they walked through what that looks like post exit, it might change their perspective on how they should build their company.
Yeah, we always see the headline number and then we forget, investor dilution for the founders, and we forget the tax bill that can sometimes come around. And that number shrinks very quickly when you take on all of that outside burden on your cap table, and you don't optimize for things like QSBS, which you said you were able to take advantage of the first time around. Well, not the first time around, but during that larger exit. Were you familiar with QSBS before, and you were sort of had that in mind and knew that it was sort of a big lifeline at the point where you did get liquidity, or was it something that you learned much later in your journey?
I actually planned around it years before we sold.
Hmm.
I remember reading about it in an article on TechCrunch, and the article was along the lines of like QSBS is going away,
Hmm.
which obviously didn't happen. This was in like
What year?
2013 or something like that.
Interesting.
And you had a deadline to incorporate your company as a C Corp, or you would miss out on the break. So I bring this up because I was at my girlfriend at the time's parents' house when we read this article. We were an LLC at the time, and we converted like 4 days before Christmas or something like that, like literally last minute, because we wanted to get on that window. And again, QSBS never went away, et cetera, et cetera. But when I looked to sell, that was one of the main negotiating points as well. I didn't want to do an asset sale. We had offers from other buyers that were going to be in a structure that wouldn't let us qualify for QSBS. And that was one of the main negotiating pieces where, I didn't necessarily sell to the buyer who was offering the highest amount, but the one that, was able to do a stock purchase and let us benefit from QSBS. So yeah, I was planning on it the entire time because it's so significant.
Yeah, I mean, your deal, you could reduce your top line like deal number by 25 or 30% in some cases and still be better off because of the QSBS benefit if it's the right structure. So yeah, I'm obviously we talk to founders every day who are kind of thinking about it a little bit too late. And I wish that it was more part of just like the founder handbook, the playbook. And second, third time founders sort of have it in view because they're like, man, I wish that I'd done that back when. But yeah, I think that things like you said, deal structure, tax optimization on the back end, paying attention to those things early can almost provide more value than staying and growing the business for another 4 years in some cases. So yeah, super important.
100%. I think it's the most generous tax break for entrepreneurs today. It is significant. I don't know the exact numbers today, but 50% taxes on the first 10 million, or no capital gain taxes on the first 10 million in proceeds.
That's right.
That's massive. That can be life changing in itself.
Yeah, and so there's so much, and I say this on other podcasts, I feel like all the time, but there's so much infrastructure around every other tax exemption in the US and just nothing for supporting founders navigating QSBS. So there's all kinds of other tax breaks, and you can go to an advisor and get a bunch of people to help you with it. But so that's what we're trying to do in the space is educate people earlier,
Nice,
so that they can take advantage.
Could not agree more.
Yeah. Something I want to get your opinion on, and not to like talk about AI because everyone wants to talk about AI, but I think it's really important in talking about the solo founder or the bootstrapped founding team or these kinds of, because just the amount of leverage in terms of both productivity and for me, I told you offline, like non-technical, harder to stand up a website without using
Yeah.
Squarespace or Wix, or do any kind of complex API calls or anything like that. But AI is making a lot of that possible. Do you think that, or what would be maybe? Do you have any sort of counter narrative ideas or insights about what AI could do for that type of founder?
Yeah, I think it's probably one of the best things we've seen in a long, long time for solo founders. All day on Acquire, we see really profitable, really lean, really efficient businesses built by a single founder. That's been a trend that we've seen for quite a while now. We haven't necessarily seen a trend in like AI built tools yet, or just
Mm,
completely automated businesses with solo founders. I think that'll come in time.
yeah.
But I personally think it's a little overblown.
Mm,
And I'll explain a little bit more on that. I remember in January and February of this year, or even December, all we would hear about is Replit and Lovable and Bolt,
yeah.
these platforms for building essentially full fledged SaaS applications in a matter of minutes. And then I think what we've seen now is we haven't seen a single platform or tool built on those platforms exclusively at a high scale of revenue. And when I say high scale of revenue, even tens of thousands or even hundreds of thousands.
Yeah.
So I think we're a little bit away from, say, the non-technical solo founder who can build, the next enterprise grade SaaS. I
Hmm.
think that's going to be coming probably within the next year or two, if not sooner. But that's one thing I've been talking about recently with my team is just how some of these apps, there's you kind of get to like 90%, and then
Yeah.
getting that last 10% completed can take forever. That's when you got to generally know engineering from what I've been seeing. But yeah, I mean the productivity gains and like what you can accomplish in marketing with a team of one, I think is extraordinary.
Yeah, which I feel like that actually on the marketing and maybe like content generation piece, like SEO work and optimization. Just if you're a solo founder, those types of activities are important, but also can feel like if I'm spending all my time doing content or optimizing my website in different ways, I'm not focusing on the product, but actually allows you to just lever up your productivity 10x to do those things and also still be spending time
100%.
on what makes your beer taste better.
Yeah, no,
Um,
like as maybe a technical founder,
mhm.
with AI, you have a content strategist and someone to write your blog posts and your tweets and your
Yeah,
posts. You have tools that can, take a podcast like this and you upload it and selects which clips you should use and what to focus on. I think that's a huge, huge unlock
yeah,
as well. And we hear a lot about the non-technical founder, but I think it's also um, as if massive or more massive for the technical founder that doesn't necessarily know how to market, because that's kind of the name of the game today. I think it's pretty clear that product quality and everything like that is going to be less important in the next year or two. Meaning, just
mhm.
everyone's able to build these types of tools, and the differentiator is distribution and marketing and sales.
Yeah. I like some opinions that I've heard recently, or I guess not opinions, but just the way that I've heard this change being framed, which is that productivity, the bar for productivity is raised and kind of leveled out, like the playing field is leveled in terms of everyone's going to be able to be 10x more productive. So that'll level the what can I get done playing field. But then sort of creativity is going to rise to the top again as being, you still need someone behind the scenes to. And I think when I think of creativity, I think of sales, I think of marketing, I think of product design and development in
Yeah,
ways that push a boundary or solve like a very specific niche problem. So yeah, I'm interested to see. I think that there's a group of people that assume that when new technology emerges, that the world sort of uh, gets sterilized a bit, where like everything starts being the same. It's like, oh, every tool, every product, it's all going to look the same because it's all going to be filtered through AI in some way. But I find that we always find new ways to be creative. So I'm excited for that next stage with AI.
100%. There's a quote that says marketers ruin everything. And it means like with cold email as an example. Marketers got their hands on cold email. Now we send, trillions of emails per day. Cold email is less effective. But rewind like 10 years ago, cold email was so effective. Oh my gosh, you'd load up, a sales offer, an outreach, you'd get like 60% reply rate because everyone thought it was like a unique email. I think we'll see something similar where, a lot of the marketing strategies, which were really hard to execute, and with AI, it makes it super easy. Those will become less effective. But like you said, finding new ways to stand out and being creative, that's always important, and that always works.
Yeah. If you think about the issues that founders come to your team with, hey, I want to sell, but I have these 3 problems, these 5 questions. If you could pull out just like 2 main things that you wish founders knew before they actually got to the point of wanting to sell. I've heard you talk about just being really organized, having your ducks in a row in terms of your financials and things like that. But is there anything just maybe that's a little bit more philosophical, or I just wish that founders had been ruminating on this idea for longer?
I wish I had a new answer here, but it's still organization, clean financials. Great to have items would be the business is entirely reliant on them, meaning they have a team in place. Whoever buys the business doesn't need the founder to run the day-to-day operations.
Yeah.
And then ideally profitable too. It's a good business that any founder would want to own and keep, meaning it's profitable. The founder isn't spending 100 hours a week running it and answering every single support ticket. And then it's organized, easy to understand, clean P&L. Those 3 items alone can dramatically increase your valuation when you sell, and you get so many more offers, so much more interest from buyers. And it's super, super easy to do. Maybe the owner reliance is probably the hardest one, but just getting organized is such a massive unlock.
Now, are you guys still only selling SaaS businesses, or do you sell other types of businesses as well on Acquire?
Yeah, we sell e-commerce, mobile, content sites. Those are our biggest categories, newsletters, also crypto, direct to consumer. We have a number of different categories that we've expanded to this year.
Okay. So like consumer package, consulting, all that kind of stuff would be able to be in on
if
the
it's
platform?
Profitable and it's online, we can help it get acquired.
Very cool. And I think you said 250,000 was maybe the average acquisition size. What's the average length of time that it takes for someone's business to get sold on through acquired? Less than a year?
We like to say 90.
Oh.
We like to say 90 days.
Oh, wow.
Yeah, typically, depending on the quality of the business and how organized the founder is and how they price it, just how much interest there is, it can take a week, 2 to receive an offer. Another, week, 2 after that to select which offer you're going to be moving forward with. Another month to 6 weeks going through due diligence, and then, around 2 weeks in closing.
Oh, interesting. Yeah, I would have thought it was way longer than that. But I know that you guys have a massive back or index of interested buyers and very well organized, so that you can, feed the right options to the right buyer at the right time. Correct?
Yep.
Yeah. Well, very cool. You mentioned a bit about, more on the front end when we were talking more philosophically about how what you want to get out of your business. And there's sort of the founder who's building maybe like lifestyle business and wants to maximize their flexibility and maybe pull some cash out of the business along the way. For founders building to sell from day one, is there sort of one strategy that maybe works better from inception that you've seen replicated and be successful many times? That is, like, if you're building to sell, does it help to have, this type of strategy in place from day one versus getting to the end and being like, okay, let's go?
Yeah, I think an easy one is just having a data room where you put any, relevant
Continually.
docs that might
Yeah.
be, important. And then as you build out the company, continuing to document your processes and your SOPs. How does everything essentially work? That is massive right there. But in terms of each business, there's really no like set, guideline. Like I think incorporating as a C corp is huge as well, so you can have your options open in terms of structures that you can accept. But don't do it too early. What I mean by that is, I don't recommend founders day one incorporate, make their company grow up really fast at the expense of, the basics. Focusing on building a great product, talking to customers, figuring out your pricing strategy. I think once you have all that locked in, like that should be priority number one, because you can organize and plan and do everything you possibly can, but it doesn't matter if you don't build a
Sure.
great company that has a lot of happy customers. So focusing on that first, and then secondary, yeah, just having a well-run organization that's you can find answers to how all of it works, and it's not essentially kept in the founder's head. I think is huge.
Yeah. Yeah. That's good. That's good insight, because it's easy to, when you start a business, it's easy to want to play company. I call it,
Yeah,
of like, do all the things that you think that companies are supposed to do and what they're supposed to look like. And you hire a PR agency and, all the kinds of things to make it look like you're a company, but you don't have a product. You don't have a customer that's willing to pay for that product. So yeah, that's a needed headspace for people to get into earlier rather than later, because
yeah,
you can burn a lot of money before you realize that you haven't actually built anything, fortunately. So
yeah. I mean, if you're planning for an exit too, ironically, it's the best way to get acquired. You have a great product, tons of happy customers, and you're growing quickly. Um, and then everything else, I think, is just nice to have aspects.
yeah. So you're expanded the types of businesses that are being sold on Acquire over time. What's up for the next 3 to 5 years at Acquire? Is it continue to do more of the same, add value for founders, or do you have other things that you can share about right now that are in the pipeline?
Yeah, I mean, first and foremost, continue to help founders get acquired. I think operating this company is one of the most rewarding things I could be doing. So I'd love to just keep doing what we're doing. We're also starting to work on a new data product that I'm pretty excited about. Something that helps founders understand their valuations, how to grow faster, stuff like that. And then when they're ready, you can immediately list on Acquired, start meeting buyers. But yeah, Brady, just keep helping founders get acquired. That's what we do.
Nice. That's awesome, Andrew. Thanks for everything you do. I actually use Acquired to check it out and look at ideas that other founders have come up with. And I think it's a great way for people to start, for entrepreneurs who don't have an idea, to grab an idea that already has some, maybe a bit of traction. That's an awesome way to become an entrepreneur as well.
Yeah.
So
Appreciate the support.
yeah, thanks for sharing. Appreciate your time today. And hopefully there'll be more QSBS exits for you in the future, and for your founders too.
Right on. Appreciate it, Brady.
Yep. Bye. Thanks for listening to this episode of QSBS Solved. We hope to hear from you soon. Remember that the content shared on QSBS Solved is for informational purposes only and should not be construed as legal, tax, or investment advice. While we discuss strategies related to qualified small business stock, or QSBS, including rollover planning, listeners should consult their own tax, legal, and financial advisors before making any decisions. Laws and interpretations can change. Individual circumstances do vary.